How you doing?
I'm good.
Nice to see you.
GPAs weren't in percentage terms, though.
No, they were not. The Fed's decision just hours away. Joining us right now with more on how the central bank's rate path is going to impact the financial sector. Jason Goldberg is Barclays senior equity analyst. What's your expectation, sir?
I think the market's widely expecting a 25 basis point cut out of the Fed, maybe a couple dissents either way, but certainly the market's pricing in a 25%.
What happens if we don't get it?
It'll be interesting to see. They certainly haven't prepared the market for that. But, at the end of the day, it's, what the economy is going to do. It matters more, I think, than what the Fed does. I think the market thinks the Fed needs to cut to keep the economy going.
So forget about for a moment what they actually do. Let's assume it's just a quarter point. The language that you're going to hear, the fight that we may hear about what the dot plots are and just what the dissension is on that board, that's what people are really going to listen to in the end. And what does that portend?
Yeah, certainly the forward look matters. We'll get the updated SEP this go around, and it'll likely show, maybe one or two cuts next year, one or two cuts the year after. I think the market's kind of waiting for the Fed to maybe go on hold for the January meeting and then maybe resume cutting in March, obviously being data dependent. We're a bit delayed on some of the data given the government shutdown. But yeah, no, the forward will matter. And clearly, I think this is the most divided we've ever seen the Fed board in at least my time doing this 30 years.
You like banks right now?
We are constructive on the bank stocks. If you look, you have a lot
across the board. Is there something you love? Is there something you wouldn't touch
I would say
right now?
We still have a slight bias for the bigger banks because they're benefiting from this resurgence in capital markets activity. You talked about M&A earlier, and just this whole deregulation theme. But by and large, a lot of the factors that have helped the stocks this year, whether it's loan growth, expanding net interest margins, higher fee income, positive operating leverage, benign credit quality, buying back stock, which is going to result in double-digit earnings growth this year, should actually all continue to 2026 and get another year of double-digit earnings growth with valuations that are still maybe in line to even slightly below historical averages.
Of the banks that you don't like, what are you a little nervous about?
Yeah, no, generally speaking, some of the regionals are not benefiting from the same economies of scale. The bigger banks didn't have the same degree of kind of regulatory environment getting worse and worse and worse over the last 15 years. It's not going to benefit much, from the rollback as well. And then also, you have an industry that just does need to consolidate. Some deals will probably go more smoothly than others, so that's another factor to keep an eye on.
How do you think about sort of the fintech gang, if you will, and how much share they're ultimately taking from either the bigger banks or some of these smaller banks? We were actually talking to the folks from Nubank who are trying to get a charter here in the U.S.
Yeah, no, listen, it's highly competitive. It's always been competitive. The number of banks in the U.S. has halved in the last 20 years, but you still have 4,000 other banks you're competing against.
Is that too many banks, or is that a good thing?
No, still way too many banks. We think it should have again, if not in the next 20 years, sooner than that. But highly competitive. There's certainly a space for a lot of these fintechs. I think it kind of actually forces the banks to adapt. I cover the top 20 banks. They're going to spend like $80 billion this year on technology, trying to, keep up and evolve. And I think you'll see more of that.
Goldman Sachs, they're buying up some different businesses. I mean, some of these banks are actually doing their own M&A right now.
Absolutely. You're seeing both kind of banks and banks getting together, and banks, kind of just expanding the financial services offering with Goldman Sachs, getting more deeper into ETFs, getting deeper into a private equity platform, a new strategic partnership with T. Rowe Price to expand what they could do on the retirement front. So it's an industry that's growing both organically and inorganically.